Welcome back everyone to the Audacious Witch channel, where we talk about the magic behind the stock market. Okay, so it happened. Friday, October 10th, the market absolutely puked. The S&P 500 dropped over 2.7%, and I saw my timeline just explode with panic. It never fails to amaze me how blind some of the big Wall Street traders really are. Just last week, they were calling for Bitcoin to $1 million, Ether to 10K, Tesla to 600. Meanwhile, gold quietly passed $4,000 and silver hit $50. Guys, when precious metals go parabolic like that, it's not a risk-on signal. It's a fire alarm. It screams global uncertainty, danger, and conflict. In this video, I'm not here to tell you to panic. I'm here to tell you this is the moment we've all been waiting for. I'm going to show you the exact chart that predicted this sell-off, how much further I think we're going to fall, and my personal shopping list for when we hit the bottom. Let's get right into it. What just happened? The dominoes are falling. So let's do a quick recap for anyone who was enjoying their weekend and missed the fireworks. First, the big one, US-China tensions just went nuclear. China put more restrictions on rare earth exports. That's the stuff we need for all our AI tech and defense. In response, Trump slapped a new 100% tariff on Chinese goods. This isn't a trade spat anymore. It's a full-blown economic war. Second, look at this chart of the S&P 500. This trend line holding strong since May was our safety net. It was tested 6 times. On Friday, on the 7th touch, it snapped. That's not just a red day, that's a major technical breakdown. And I saw some people on Twitter, by the way, I'm on Twitter now, come say hi, saying, oh, you can't predict this with TA? That is such BS. Stick around and I'll show you the one simple chart that laid out this entire scenario perfectly. On top of all that, we're hearing serious rumblings of another government shutdown. Millions of federal workers out of a job, no paycheck, in an economy that's already slowing down. That's a recipe for a recession. We're already seeing the bond market react with TLT ticking up and oil prices are dropping. The market is pricing in a major slowdown. The real problem no one's watching, the AI bubble. But the tariffs and the shutdown are just the trigger. The real problem, the reason this crash could get deep, is the insane speculative bubble we've built underneath the market. And its name is artificial intelligence. Now look, I'm a tech investor. I believe AI will change the world, absolutely. But it reminds me of the railroad boom or the dot-com bubble. First comes the hype, then comes the crash. Then comes the real revolution. We are deep in the hype phase. The numbers are just staggering. Tech companies are set to spend $400 billion this year on AI infrastructure. The entire Apollo program to put a man on the moon costs less than that in today's dollars. We're funding a moonshot AI mission every 10 months now. For what? Wall Street Journal reports that American consumers are only spending $12 billion a year on AI services. To put that into perspective, the investment is the size of Singapore's economy. But the revenue is the size of Somali's economy. You don't need a finance degree from MIT to see that math doesn't work, eh? We're seeing all the classic signs. A startup called Thinking Machines just raised $2 billion without a product, and they literally told investors they can't answer any questions about what they're building. It's absurd. The big players are even using accounting tricks, shifting billions in spending off their books into things called SPVs to make their profits look better. Meta, one of the biggest cash machines on the planet, now has more debt than cash on its balance sheet because of AI spending, FOMO. The whole thing is a house of cards, and the trade war just blew a giant gust of wind at it. For those that have been watching and that are new to the channel, if you don't know what FOMO means, it means fear of missing out. And nobody wants to miss out on a good opportunity. So the CEO of Meta, Mark Zuckerberg, he is getting loans to invest in AI. The chart that predicted it all. Okay, so for everyone who said this was unpredictable, let me show you some simple, no BS technical analysis. All I want you to do is draw one line, connect the low from the 2020 crash to the low in 2022, and extend it out. Now draw a parallel line from the 2021 peak. What do you get? A perfect channel. And where did the market peak just a couple weeks ago? Right at the top of the channel. To the dollar. It kissed the roof and got rejected hard. So if that's the ceiling, where's the floor? The bottom of this channel. And if we measure the distance from the recent top at 6,762 down to that lower trend line, we get a drop of almost exactly 25%. This isn't magic. It's just mapping out the market's long-term momentum. The sell-off didn't come from nowhere. It came from the top of a predictable range. My 4-part plan to buy this crash. So a 25% crash is on the table. Am I selling everything? No way. This is an opportunity we've been waiting for, and I'm not jumping in right away. My plan is to wait for the S&P to drop about 18%. That's my signal to start deploying cash. I might not catch the exact bottom, and that's okay. The goal is to buy great companies at a great discount, not to be a hero. Here's what's on my shopping list, broken into 3 types of stocks, plus a bonus category. Category number 1, the Fortress stocks, 30 to 40% of my capital. These are the high-quality, wide moat giants, profitable, great balance sheet, with more cash than debt, and near monopoly power. If Nvidia gets cut in half, I'm a buyer. Same for Amazon and Tesla or Netflix. You buy these so you can sleep at night. Category number 2, the 10x hunters, 20 to 30% of my capital. This is where we hunt for explosive growth. These are innovative companies, maybe with a smaller moat now, but it's widening fast. I'm watching The Trade Desk, Carvana, and Duolingo. And you know I'm not forgetting my favorite coffee play that's taking over America, Dutch Bros. A crash here is a gift for a long-term hold. Category number 3, the value comeback, 20% of my capital. These are established brands that the market has beaten down. They're not growing like crazy, but they're trading at cheap valuations and are in a turnaround. Think about Lululemon, Pepsi, and even The Honest Company. They have loyal customers and strong brands that will survive a recession. Category number 4, the bonus insurance plays, remaining capital. Okay, since you stuck around, here are the bonus stocks. These are my just-in-case plays. If this recession gets ugly and gold stays above $3,000, that signals war is a real risk. In that scenario, you want to own energy. Oil will have crashed with a recession, so buying an oil major like Chevron or Suncor here could be huge. You get a great dividend while you wait for a price spike. And with the AI build-out, even in a bubble, the demand for energy for data centers is real. That means we need more nuclear power. The world is running low on uranium. So if names like Cameco get crushed in the sell-off, They become a must-own for the next decade. The big question, what if it's worse? Now, what if this isn't a 25% correction? What if it's a 40% or 50% crash like 2008 or the Great Depression? First, let's be realistic. Those events are historically rare. 2 to 3 times, that's it. A 20 to 25% correction happens much more frequently. My plan is based on the most probable outcome. If we break below that 25% channel support, then we have a new conversation. That would signal something is truly broken in the financial system. If that happens, I'll make another video and we'll adjust our strategy. But for now, we don't invest based on fear of the black swan event. We invest based on the probabilities and the technicals in front of us. So for now, I wait for that 18% drop. So that's the game plan. The market is giving us a massive opportunity, but it demands patience. Don't let the headlines scare you into selling the bottom or FOMO into buying too early. I want to know what you are doing. What's on your watch list for this crash? Let me know down in the comment section below. I read every single one. And if you got any value out of this today, do me a solid and hit that like button and subscribe for more no BS market analysis. This is a time for preparation, not fear. We're going to get through this and come out stronger on the other side. Stay patient and I'll see you in the next video.